Hello there. Today in this video, I'm going to discuss if you can use Elliott wave theory for trading cryptocurrencies. When I say trading, I mean both trading for the short term and also investing on a longer time frame. Personally, I see investing as essentially trading for the longer time frame. So to my mind, these two are not very different. Cryptocurrencies have done very well over the last year or so, and a lot of returns in some of these currencies can be attributed to the early adoption going on, especially with all the different decentralized apps being built around them. In this backdrop, it's a bit difficult to predict which cryptocurrencies would dominate the space. Even people with technology background can at best guess the future of different cryptocurrencies. However, Elliott wave theory is one technique that can provide some insights on the future moves in the price of different cryptocurrencies. Now, Elliott wave theory uses analysis of price structure. So in order to effectively apply it, you need a certain amount of price volume trading data. When a cryptocurrency is new to the market, the price volume trading data would not be available. In this sense, they are much like IPOs, because when stocks get listed, there is not much price volume trading data available for them either. At this point, it makes a lot of sense to just rely on whatever information you can get to figure out if the business model of the stock or if the future of the cryptocurrency is sustainable and whether they will be able to sustain any growth momentum they might have had. In case of cryptos too, where a crypto is new to the market, its price movement is based on the adoption it gains and whether this adoption would sustain. However, after some time, when you have some more price data available, you can use Elliott wave theory for analysis. If you look at all the cryptocurrencies today, they derive value primarily from their adoption and application for specific purposes. Apart from this, there is the fact that there is a lot of easy money available around the world thanks to the central banks and negative yields. So essentially, a lot of money is also entering the crypto space because they are looking for alpha. However, once you have enough price and volume data, you can use that data to anticipate future price moves. This is also true for stocks. It is also true for indices. And in case of cryptocurrencies, also this is true. More importantly, if you are looking to hodl cryptocurrencies for longer term, in that case, Elliott wave theory could be especially insightful. Let me first give you some examples from the stock market to drive home how insightful Elliott wave theory can be. Last year, in light of COVID, the Nifty Pharma Index had a tremendous run. The pharma mutual funds outperformed other types of mutual funds and they returned over 50% or higher. However, we had been anticipating a major rally in pharma sector as early as 2017. In fact, in one of our blog posts on our website, we outlined how one should start accumulating pharma companies and pharma funds as a contrarian bet for the long term. We also said that it's possible that we might see another leg down, and that would be another great opportunity to accumulate more stocks and mutual funds in this space. Of course, we couldn't have imagined that COVID would strike as it did, yet pharma companies were preparing for a major rally and the prices were signaling the same as early as 2017. This kind of an insight can be especially helpful in rapidly changing, highly competitive areas of technology, which is why Elliott wave can be a great complementary tool for investing in cryptocurrencies. Now I will share some examples of applying Elliott wave theory to cryptocurrencies so that you realize how this analysis can be helpful for trading or investing in the crypto space. Let's first start with Bitcoin. Bitcoin had been signaling a major rally for a long time before we saw the kind of move like we did in the last 1 year. In this chart here, we see the basic Elliott wave 5-wave up move, which is followed by an ABC correction. This should have been the first signal to you that Bitcoin may be poised for a major rally. You could have waited for further confirmation for buying to emerge after this correction. This confirmation indeed happened as indicated by the lower degree 5-wave move emerging here. This was followed by another lower degree ABC correction. Around this point, you had more than enough evidence to buy Bitcoin for long-term purposes. This was the March bottom, and since then there has been a major rally in Bitcoin and it hasn't looked back ever since. Now let's look at another example from another cryptocurrency. This time it's from Ethereum. In case of Ethereum, we see there is a 5-wave move, which should again tell you that the primary trend is up. This was followed by a flat correction marked as ABC. Again, once this flat correction completes, the prices head higher to take out the highs of the flat correction. Now let's look at another example, this time on charts of Cardano. In this chart, we again see that there is a 5-wave move, and the 4th wave of this 5-wave move is actually an irregular triangle. Once this 5-wave move is complete, then you have an ABC correction. This is a simple zigzag correction. Again, end of a correction here implies a move towards higher prices above the wave 5 high. These are just some examples from different cryptocurrencies. I have shared examples of all the major basic corrective patterns that occur in cryptocurrencies. However, complex corrections like double or triple zigzags are also very common in cryptocurrencies, and so if you are looking for a way to analyze cryptocurrencies, then the Elliott wave framework can be a good starting point for you to trade or invest in different cryptocurrencies. With this, we come to the end of this video on this topic here. I hope you enjoyed the video, and if you did, please remember to like the video and subscribe to the channel. Thank you for logging in.